What's happening, you guys? All right, it is time for another weekly update on the S&P 500 earnings, as well as we'll take a look at the price, how they compare, and also take a quick look at the bond market, bond yield curve as well at the end here, right? That's good for those of you guys in TSP and with any kind of investment accounts, whether it's a 401k, IRA, regular stock market account, or is that called a taxable brokerage account? Anything of that sort. Hopefully, this will be of some at least a little bit of interest to you. Particularly for TSP, what I want you to get out of this is that is basically what to expect from earnings. And when it comes to earnings, that's what drives the price. All right. So if we know what to expect from earnings, then we know what to expect the price to do over the course of time. All right. Don't worry about what prices do in the short term so much. Focus more on what it's doing over the long term. And right now, it's looking up. I'm going to get to the details here and show you what we're talking about here. Okay. For those of you guys with IRAs and or do you, if you're TSP account holders, if you do anything with the TSP mutual fund window, there'll be some info in here for that, and also for regular stock investors, right? I'm only going to cover the companies that I reported, I got updated data from over the last week. It's not going to cover everybody who's reported. There were 30 companies I already talked about last week, so we don't need to rehash those. Just going to go over the 100 or so that updated over the last week, and give you kind of some ideas there with what kind of how many did what kind of dividend changes, or what overall they've done with their performance. What are they expecting over the course of the next year? Stuff like that, right? Again, fundamentally, stock prices always follow earnings. So if we pay attention to the earnings, we know what to generally expect from the price as well. Not necessarily the case, but it's much more often than not the price will do what they're expecting the earnings to do. And I follow what the analysts are expecting earnings to do, regardless of price. So that's the difference here. All right, so let's get to the data. Let's start with this data here, guys. This is going to be the totalizer showing what we've got going on so far over the course of the quarter across the index. Last week, I had 30 companies updated. Right now, we've got 110. So I've got about 80 updates done. I was expecting over 100, a little bit over 100, but a number of those got pushed back to next week or even a slight bit later than that. There are probably even some that reported last week I was expecting this week, but already reported previously. I don't know, stuff like that. But whatever the case, I got 80 more updates this week, and I don't remember what the percent was year over year last week. I want to say it was like 10% or something along that line. Maybe, I don't know. I'd have to double check the data there, but we're at 11.37% year over year so far. And 95 out of the 110 have reported positive earnings growth. It's really good there. 86.4% of the index has reported positive earnings growth so far. We are almost a quarter of the way through earnings updates for the current quarter. So we're looking pretty good there. I don't expect to see anything above, anything much higher than 70 by the end of the quarter, but we're off to a really good start at the very least. So that's a positive. The other thing here is 12-month, the 12-month, 4-quarter cumulative earnings over for all the companies is now currently up to 10.3% growth. As you see there, it's been accelerating since second quarter of 2025. So this is what we want to see. This is affirmation that the prices have generally done what they should be doing. Should be seeing price growth to go with that. So this is a positive here. Okay, on the negative side, here's my schedule here that we looked at. We actually got, right at 80 updates here for the week. And their year-over-year performance is about 6.5 points. So it's not to the degree I was hoping for. Again, I was expecting to chat over 100 companies this quarter, so that might have factored into why the overall number wasn't higher than I was expecting it to be previously. I think last week I talked about, I think it was supposed to be about a 30-point increase to my target price this week, just this week alone. But I don't know, maybe the 20, 25 or whatever it is companies that did not report this week might have had an impact on that to some degree. So what, I don't know. But whatever the case, it had very little impact on my price target this week. And moving on to that, here are my price targets. Actually, my near-term price top is actually just a tad lower than it was last week. I think it was 71.55 last week. It's down to 71.50 now. And the reason why, because, well, first, we only got the 6.5 point increase there on what we actually did have. But then the percent earnings growth across, the expected earnings growth over the next quarter, it dropped from a little over 13%. Remember, a very small sample size, down to about 12.5 now. So yeah, there's a possibility it will come down some more. We started the quarter right at around 12%, as I recall. So we're still saying somewhere in the general neighborhood at the very least, right? There's going to be some up and down adjustment going on here between the price targets and the actual price movement. Now, I believe the S&P actually got up to 71.65, if I recall, this week. So it's getting a little bit too high based on that. Yeah, it's right at 71.65 right now. So just based on that, we're getting maybe just a hair above what is reasonable based on what numbers I already had before. But again, I talked before how I'm still trying to recalibrate my formula here because I took a couple of year hiatus from this and more recently decided to get back into it. So it's going to take some more periods of seeing peaks to see where they line up in relation to my price targets to get a better calibration of what my formula should be at, basically. That's a simple way I can explain that. Okay, so top and bottom end here for the short-term reasonable price range would be anywhere between 6,900 and 7,150. As you see, we're just a hair above that. This coming week is going to it's going to be a very busy week with earnings updates. I will get to that in a bit. Speaking of that, I can come back to here, and you can see that right now I got 209 companies on the schedule for next week. That's a lot. But now remember, some of those were companies that I was expecting this last week, but got pushed back to next week. And there's a pretty good chance that some of these companies that are already expected between 27 April and 1 May will actually report between 4 and 8 May instead, or possibly even later. There's no telling, but it's either way, it's expected to be an extremely busy week coming up with earnings updates. 500 companies, so more than 40% of the index is going to get looked at by me in the next week, and we're already 21, almost 22% reported right now. So we're going to be well over half the index reported by this time next week if all those 209 companies actually do report next week. So we're going to have a really good idea of what's going on with S&P 500 earnings by this time next week, more than likely. Okay, even with the bond yield information updated, which I will get to that in a second, as you see, the beer ratio is still currently at 75-25. Those of you guys who are retired and just want a simple G and C mix in your TSP accounts, 25, make 25% conservative G fund, and the other 75% in your S&P 500 index fund, which is the C fund. I'm kind of giving the extra detail there for those of you guys who don't have TSP accounts and think I'm speaking Greek. If you hear me talking about this fund or that fund, like I don't know what that means, because this isn't meant just for TSP investors, right? But it is primarily for TSP because obviously my influence on that. All right, so that's what we got to look forward to. Now let's go ahead and finish off with looking at the bond yield curve. Looks very much very similar to what we had last week. Very minute amount of inversion going on here between on the long and medium term bonds, I would say. Just a tad bit between the 1.5 coming down to the 2 and then back down to the 4 month, and then a little bit to the 1 year, and then it goes back up and trends upward all the way up. This is a bullish bond yield curve. Not hugely bullish, but it is on the bullish side. It is not a bearish curve. A bearish curve will look more kind of like this. The short-term bonds will be very, very high and restrictive, and then you'll come down to the lowest amount, usually here in the middle somewhere, and then it comes back up toward the right side. And then there's, sometimes the right side will be below that of the bond yields on the left side. Sometimes it'll be above it. Either way, it's a pretty good looking, decent enough looking bond yield curve. Again, we would need to see the Fed funds rate drop down to 3.5, in the 3.25 to 3.5 range for these short-term yields to get pushed back down enough where it looks definitely more bullish. Either way, it doesn't look bad overall to me. All right, guys, we're going to finish this up with get a more detailed breakdown on the companies that actually reported, the 80 that reported this last week. Show you how many of them are in the top 100 in the S&P 500 market cap rank and which ones made what kind of dividend yield changes. No, I'm not going to give specific changes. I'm just going to give you a rundown. How many of them increased dividends? How many of them decreased dividends? Stuff like that. Also, what overall they did as far as what their dividend yields look like. perhaps, and the year-over-year performance and what they all are expecting for growth over the next year. Okay, so let's start with how many of these are in the top 100. Looks like 23 of them are in the top 100. Just to break it down, as you see there, Tesla was the largest of the companies in here that reported this last week. $1.413 trillion market cap. Our next one would be, let's see, Intel, and then Procter & Gamble, and then Lam Research, and United Health Group. I did see an article talking about, I guess, United Health Corporation Group's price target got pushed up by, I don't remember if it was Morgan Stanley or somebody else. Some analysts did increase their price target based on their earnings data, though. So good thing for them. All right, all these companies that have green in their dividend area are the ones that increase their dividend yield since the last time I looked at them. That is 22 of them. So 22 out of the 80 companies not only pay a dividend, but they increase. Actually, I think one of them was not paying a dividend before, but now does. I'm trying to remember which one it was. I don't remember if it was Kinder Morgan or somebody else. There was somebody in there. I remember having a dividend, not having a dividend last I knew, and now they do. Again, it could have been Kinder Morgan. It could have been somebody else. But 22 dividend increases and only one decrease. That was by Crown Castle Incorporated. They went down from, I thought it went down from 475 to 425. I'll have to double check that. For some reason, I might have forgot to update that. I could have sworn it dropped to 425 though. So again, most of these companies increasing their dividend yields and only one decreasing bodes well for the broader index, right? Companies are not going to increase their dividend yield if they have concerns about their future earnings performance, right? So most of these companies, when almost a quarter of the companies that reported increase their dividend yields, that sounds like we have more reason to be more optimistic than pessimistic here, okay? So this is a good thing here, again. All right, so I still don't have the year-over-year performance in terms of percentage points, but I do have year-over-year performance in terms of dollars and cents as far as the earnings per share are concerned here, right? I have them sorted from highest to smallest as far as their performance is concerned. As you see there, Comfort Systems, plus 576 per share performance. So yeah, it was a huge increase, more than double their. I don't know why I was getting it in my head that there was something wrong with that, but no, it's absolutely correct. A huge increase by them. Comfort Systems Incorporated, FIX is their stock symbol. If you want to check them out, might be worth looking at. I don't know. 13% earnings growth over the next year. It's roughly similar to the S&P 500's expectation, maybe just a tad higher, perhaps. So that gives me reason to question, are they, I don't know if I would expect to get better performance out of them than the S&P 500, but I don't know. It's possible, but there's more to that. I don't look at the micro stuff. This is just for you guys. If you want to evaluate these more at the detailed level, at the micro level, use this information and do some more research and see if what's going on here. Like with this company particularly, why did their earnings grow that much in a year? Did they do a lot of CapEx that paid off? Did they have some negative, abnormally low number that happened last year that we're comparing against for whatever reason? Like they had to pay a large tax, or maybe they lost a lawsuit, or had to pay out a lot in legal issues. There's a lot of questions that could be going on there. So that's why you want to be looking at a longer term progression of their earnings if you're looking at at the nuts and bolts with any particular company. All right, just giving you they look really good as far as year-over-year performance right now is concerned, and they still look good. Next quarter, it's still looking to be good there. 937 is what's anticipated versus 653. 1029 2 quarters from now versus 825, and then it looks like it'll taper on. 4 quarters ahead is where it gets watered down. So what's going on there? I don't know. So that could be a good one to look at. I don't know for sure. Just something more for you guys to scrutinize if you guys want to possibly have any interest in these guys. Okay, as I mentioned, they're already only a small. Only 12 reported negative earnings growth out of the 80. So, okay, there's a fire somewhere in the region here. That's what that is. Either way, vast majority of these reported earnings growth. 86% is where we're at right now in terms for the entire quarter. So Again, more reason to be optimistic. Now let's go ahead and look at expected earnings growth. I'm going to go by dollar first, and then we can see how many of these are expecting double digit. Actually, let's go greater than 15%. Something that, so we know which ones are expected to have a little bit more likelihood of outperforming the broader S&P 500 index. Those of you guys who are on IRAs or more particularly taxable brokerage accounts. So only got 14 companies here with more than 15% growth expected. Then if you see a larger dollar amount that translates to that, there's a better chance that it's believable, or more so if their trailing 12-month earnings add up to a fair amount. Like this one here, for example, Dow Incorporated, their earnings are negative. So when they go from negative $1.20 per share to $3.84 is what it looks like, you're going to get an exaggerated expectation here. So that's not one I would have. Me personally, I don't like to touch companies that are earnings negative. That's just my rule of thumb. I don't do companies like that. So I would already not be having any interest in them regardless at that rate. However, you can look at these other ones here though. Who's this here? That is Southwest Airlines. They went from a negative to a positive on their year-over-year earnings. Their 12-month earnings, their trailing earnings look like they're okay, and 86% earnings growth expected. Was not really expecting that from them because if I recall, United Airlines also reported this week, and they did not look so good, at least from the numbers that I saw. All right, but these are the ones you might want to take your first looks at if you're interested in adding anything to your portfolio. Charter Communication, Lockheed, Steel Dynamics, Dow, United Health Group, Lam Research, Newmont Corporation, Southwest Airlines, Freeport-McMoRan, ServiceNow, Intel, Keurig Dr Pepper, Huntington Bancshares, and CSX Railroad. All right, last thing I want to cover right now is how the snapshot looks for the different sectors. Again, if you're in the TSP mutual fund window, or if you have, you might not have so many options if you have a 401k that's not TSP. But you will have options if you have an IRA or a regular taxable account, right? So if you want to more narrowly focus your money and have a chance of getting better performance from the money than you can from stock index funds, this is where this comes into play. You might get it. Right now, what this is telling me is that financials, energy, and information technology, and maybe a material sector are the four sectors you might want to focus your attention on. Financials, I was not expecting to do that well before the quarter started. So with them pushing up like that, it gives me more reason to have an interest in them myself. Energy, how much of that is based on what oil prices have done because of what's happened in Iran over the last a couple months, whatever. Is it going to stay that way? There's some risk and reward there. Okay. It could pay off for you still if you do invest in that area, but can we expect prices to come back down and water down their earnings potential, and which would also water down their price potential? Material sector, that's the same thing. They are sensitive to oil prices as well, generally speaking. So that would be another one I would want to watch out for as far as the oil prices. So given that, financials and infotech are the two sectors I think I would have more confidence with. Yes, there's been a lot of concern about capital expenditures on AI. It might pay off. You don't know. A lot of people are concerned about the price premium for this stuff. Is it worth what you're actually going to get? What's that term? Is the reward worth the effort? Something one of those analogies there. But there are other parts of the infotech sector, particularly hardware and semiconductors. I am particularly interested in myself, especially hardware. SanDisk, I talked about being one I have an interest in myself. So, and I'm not trying to encourage you to buy shares of SanDisk. I'm just saying that's what I'm looking at myself. Otherwise, though, yeah, the sector as a whole, I still think looks pretty good. I'm not really concerned about the concerns about AI valuations and stuff. Overall, the earnings are still there across the entire sector there. All right. I do want to take a little more quick deep dive look at the financial sector and see if there's any particular area of that sector that might be particularly driving it. Probably banks, because banks just did their earnings. Yeah, a lot of the banks did their earnings updates recently, but we'll double check. So breaking down the financial sector, we got three groups here: banks, financial services, and insurance. So which of those is doing what? Right now, none of these is really looking like they're doing much of anything of interest. So I will have to double check what is going on there. Why is this one reporting? Oh, no, that's their year over year. Okay. Now I got that all backward. That's what they've actually done year over year performance. My bad. Okay, so communication services is the one that is up a lot, but I talked before about how that figure is exaggerated a pretty fair amount by, I don't remember which company it was that had a very largely negative earnings report that is really skewing the result. So it's not really expected to be that high. However, they might still be a good one to look at. And Infotech is, again, even though they had one of the better year-over-year performances, they're still expecting almost 33% earnings growth over the next year. Again, that's something to have an interest in. Materials, again, I've talked before about particularly metals and mining group. I have a lot of concerns about their ability to maintain. Actually, one of their, I think gold, their price target just got dropped by JP Morgan. I can't remember. Somebody dropped their price target for gold from their year-end price target from 5,700 down to 5,200. So I have a little more reservation about investing in the materials sector myself. So given that, I think I would maybe, considering all this, focus particularly on communication services and information technology and possibly nothing really else at the moment as far as looking for momentum buys. We're going back to that communication services group, though. We got telecom services and media and entertainment. Telecom overall, 3 companies only doing about 4.75% growth. Nothing to really catch my interest there. Media and entertainment, this group here. Now, cable and satellite, one of those guys was one of the ones that really screwed up the data here. So that's why I would not trust that information there. However, we still got 24% growth expected from a couple of advertising companies, 72% from movies and entertainment companies, 27% from interactive home entertainment. You can look more, you can do stock screeners on if you have a stackable account to look at that. In the interest of saving time, I'm not going to cover those here, okay? But I can, if you have questions about them, I can, if you want to know about which ones are in those groups, I can answer it in the comments section, but not going to go into that far into the weeds with this here, okay? And looking at the information technology sector, or tech sector, more affectionately, I guess, informally, whatever. Again, it breaks down into software, hardware, and semiconductors groups. All 3 of them are expecting double-digit growth, but especially semiconductors, 60.8% from 19 different companies. That's a pretty good amount. And tech and hardware, 25 companies expecting over 34, almost 35% growth over the next year. Again, those are good areas to look at. Even when the market's been down at times, I've seen some of these hardware and semiconductor stocks performing well. So that's usually a good sign for what to expect from them. All right, guys, I'm going to wrap this one up and call it a day. You guys, hope you guys got some good info or details out of this that might help you with some of your investment decisions. Let me know in the comment section what you think, what was particularly useful, what would you like to see more of, or if you want more elaboration on something, it doesn't matter, just whatever kind of engagement you think actually helps me and helps you as well here, okay? So that's all I got. We'll have another update for you next week. Thanks for watching. We'll see you then.